Hello everyone, this is Riya Singh, the currency analyst for Nirmal Bank. So let's look at the current economic situation in India and where the Indian rupee momentum is headed. Now, if you look at the India's economy, it has slowed in the final quarter of 2021. The GDP growth has slowed to 5.4% Y on Y in the fourth quarter from 8.5% that we have seen in the third quarter. Now, the government has also reduced its estimate of the GDP growth for the fiscal year 2022 to 8.9% from 9.2% earlier that it had published in the budget. So going forward, multiple headwinds are likely, to weaken the pace of the recovery. So GDP growth could come at around 8% in the fiscal year ending 2023 with risk on the downside. Going forward, if you look at the Indian rupee, it has witnessed losses as a lot of focus has been put on the higher inflation that is coming into the country due to the surging oil and global slowdown due to the Ukraine war. As there is as Ukraine war has intensified. Now, if you look at the Brent oil itself, it has extended its rally to $125 per barrel. So, even if you look at the current oil prices, India relies heavily on the overseas purchases in order to meet its three-fourths of oil requirement, making it one of the most dependable in the Asian continent on the imported crude oil. So, a lot of risk is coming on that counterpart. So, if you look at the oil prices, which are already more than 6% up, uh, worsen the price pressure as well as is hurting the nation's finances and also bringing in the inflation into the country. Thus, concluding that the Indian rupee is quite sensitive to the supply side shocks. Now, where do the central banks stand on the continued weakening of the Indian rupee? Now, it did, sold dollars into the market in one of the sessions. But if you look at the sessions after that, Indian rupee has continued to weaken against the dollar. So it may come in one of the sessions and again introduce, again sell dollars and buy rupees, but any level like it has defended before. For in case during the pandemic, 74 and 75 levels were very prominent, especially 74 levels. So RBI had maintained that level. This cannot be said in the current ongoing geopolitical tensions and the inflation that is coming in, taking into consideration the inflation that is coming into the Indian economy due to the rising crude oil prices. So, thus, RBI may intervene in the spot and the forward market from time to time, but it has, even if you look at the minutes, it is going to maintain the loose monetary policy stand, taking into consideration the slowing in the GDP growth and the pressure that the fiscal deficit will bring in. Going forward from here, we can say that even if you look at the other factors, now we have covered GDP, we have covered inflations, and the next part that is playing into against the Indian rupee is, of course, the Fed backing the idea of going for a rate hike. Now, if the Fed in the upcoming meet that is scheduled on 15th and 16th goes for a rate hike, it will lead to a monetary tightening and increase in the borrowing cost. This will trigger the outflow from the emerging markets. Now, if you look at the numbers in the overall FII's numbers, they have already withdrawn around $6 billion if you from the September month. And if the ongoing risk continues and Fed goes for a rate hike, the same outflow could intensify. So overall, the future of the Indian rupee does look a little bit, bleak. unless some good monetary policy measures are taken. But overall, you can definitely you can see Indian rupee testing the levels of 77.50, 78.25 in the coming sessions. Um, Thank you for listening, and happy Women's Day.